In today's world, money is no longer limited to physical cash and bank accounts. Cryptocurrencies have emerged as a new form of currency that operates on a decentralized network, promising a range of benefits over traditional fiat currency. While cryptocurrencies have gained popularity and adoption, fiat currency remains the backbone of the global economy. So, which one is better? In this video, we'll explore the benefits of both cryptocurrency and fiat currency to help you understand which one might be the best choice for your needs. Whether you're a business owner, investor, or simply looking to manage your finances, understanding the pros and cons of each currency can help you make informed decisions and navigate the ever-changing financial landscape. Inflation. Fiat currencies are subject to inflation, which means that the value of the currency can decrease over time. This can be particularly problematic for individuals who save money or hold onto assets denominated in fiat currency, as their purchasing power can decrease over time. Centralized control. Fiat currencies are controlled by governments and central banks, which can lead to political influence and manipulation. This centralized control can limit transparency and accountability, and can lead to decisions that benefit certain groups or individuals over others. Vulnerability to economic crises. Fiat currencies are vulnerable to economic crises, such as recessions or financial market collapses. In these situations, the value of the currency can decrease rapidly, leading to economic instability and uncertainty. High transaction fees. Fiat currency transactions can often involve high fees, particularly for international transactions or transfers. These fees can be a significant burden for businesses and individuals and can limit the efficiency and accessibility of the financial system. All these issues and government control of money makes it hard for many those who are unbanked due to inflation be so high they can't open account. Some other disadvantages with fiat currency. Limited accessibility. Fiat currency can be limited in accessibility, particularly for individuals who live in underbanked or underserved areas. In many parts of the world, individuals may not have access to traditional banking systems, which can limit their ability to participate in the global economy and access financial services. Counterfeit risk. Fiat currency is susceptible to counterfeiting, which can lead to economic instability and uncertainty. Counterfeit currency can flood the market and lead to a decrease in the value of legitimate currency, as well as undermine trust in the financial system. Lack of anonymity. Fiat currency transactions are generally not anonymous, as they are typically tracked and monitored by financial institutions and government agencies. This lack of anonymity can be problematic for individuals who value their privacy or who are concerned about the risk of identity theft or fraud. Environmental impact. Fiat currency has a significant environmental impact as it relies on the use of natural resources and energy-intensive production processes. This can contribute to climate change and other environmental issues, particularly as the global economy continues to grow. In recent years, cryptocurrencies have emerged as a new form of currency that operate on a decentralized network. While traditional fiat currency has long been the backbone of the global economy, cryptocurrencies offer a range of unique benefits that are changing the way we think about money. From increased security and privacy to faster, more efficient transactions, cryptocurrencies offer a range of advantages over traditional currency systems. Let's take a closer look at the benefits of cryptocurrency and explore how these advantages are transforming the financial landscape. Whether you're a cryptocurrency enthusiast or just starting to explore this new technology, understanding the benefits of cryptocurrencies can help you make informed decisions about your finances and stay ahead of the curve in an ever-changing financial world. So let's dive in and explore the exciting world of cryptocurrencies. Decentralization. One of the key benefits of cryptocurrency is its decentralized nature. Unlike fiat currency, which is controlled by central banks, cryptocurrencies operate on a decentralized network of computers that anyone can access. This means that transactions are not subject to the same restrictions and controls that come with fiat currencies. Benefits of decentralization. Decentralization reduces the risk of censorship and ensures that no single entity has control over the system. Cryptocurrencies operate on a peer-to-peer network, which means that transactions can be conducted directly between users, without the need for intermediaries. The decentralized nature of cryptocurrencies makes them more resistant to attacks and more secure than traditional forms of currency. Circulating supply. Another advantage of cryptocurrency is its potential impact on circulating supply. With fiat currency, the circulating supply can be adjusted by central banks through monetary policy. However, the circulating supply of cryptocurrencies is determined by the protocol and cannot be changed without the certainty. Here are some potential benefits of limited circulating supply, as is the case with Bitcoin's 21 million cap. Scarcity. Limited circulating supply creates scarcity, which can drive up demand and increase the perceived value of a currency. This can be particularly beneficial for investors, as it can lead to increased returns on investment and higher profit margins. Price stability. Limited circulating supply can also help to stabilize the price of a currency, as it can limit the impact of inflation or deflation. This can provide greater predictability and stability for investors and businesses, making it easier to plan for the future and make informed financial decisions. Protection against inflation. Limited circulating supply can also provide protection against inflation, as it can limit the amount of currency that can be created over time. This can help to preserve the value of a currency and protect it against the devaluation that can occur with excessive inflation. Reduced risk of manipulation. Limited circulating supply can also reduce the risk of manipulation or corruption, as it can limit the ability of individuals or institutions to exert undue influence over the supply of a currency. This can increase the transparency and accountability of the financial system and help to ensure that it operates in the best interests of all participants. Circulating supply. Another advantage of cryptocurrency is its potential impact on circulating supply. With fiat currency, the circulating supply can be adjusted by central banks through monetary policy. However, the circulating supply of cryptocurrencies is determined by the protocol and cannot be changed without the certainty. Here are some potential benefits of limited circulating supply, as is the case with Bitcoin's 21 million cap. Scarcity. Limited circulating supply creates scarcity, which can drive up demand and increase the perceived value of a currency. This can be particularly beneficial for investors, as it can lead to increased returns on investment and higher profit margins. Faster transactions. Cryptocurrencies can offer faster transaction times than traditional financial systems, as they do not require the same level of intermediary processing and approval. This can make it easier and more efficient to complete transactions in real time, which can be particularly valuable for businesses and individuals who rely on fast and reliable transactions. Price stability. Limited circulating supply can also help to stabilize the price of a currency, as it can limit the impact of inflation or deflation. This can provide greater predictability and stability for investors and businesses, making it easier to plan for the future and make informed financial decisions. Protection against inflation. Limited circulating supply can also provide protection against inflation, as it can limit the amount of currency that can be created over time. This can help to preserve the value of a currency and protect it against the devaluation that can occur with excessive inflation. Reduced risk of manipulation. Limited circulating supply can also reduce the risk of manipulation or corruption, as it can limit the ability of individuals or institutions to exert undue influence over the supply of a currency. This can increase the transparency and accountability of the financial system and help to ensure that it operates in the best interests of all participants. Privacy. Cryptocurrency transactions can offer a higher degree of privacy than fiat currency transactions, as they can be conducted anonymously or pseudonymously. This can be particularly important for individuals who value their privacy or who are concerned about the risk of identity theft or fraud. Lower transaction fees. Cryptocurrency transactions generally have lower transaction fees compared to traditional banking transactions. This is because cryptocurrencies operate on a peer-to-peer network, which means that there are no intermediaries to charge fees. Global acceptance. Cryptocurrencies are generally accepted around the world, which means that they can be used for international transactions without the need for currency exchanges. This can be particularly valuable for businesses that operate globally or for individuals who frequently travel or conduct business with international partners. Security. Cryptocurrencies offer a high level of security as they use advanced encryption techniques to protect transactions and wallets. Additionally, cryptocurrencies are generally more resistant to fraud and hacking attempts due to their decentralized nature. The use of cryptocurrencies by businesses and banks is one of the most exciting developments in the world of finance in recent years. Here are some examples of how these organizations are using cryptocurrencies. Tesla. The fact that a company like Tesla, which is one of the most innovative and forward-thinking businesses in the world, has invested in Bitcoin and is accepting it as a form of payment is a clear sign that cryptocurrencies are becoming more mainstream. PayPal. The decision by PayPal to allow its customers to buy, hold, and sell cryptocurrencies on its platform is a huge step forward for the industry. It not only makes it easier for people to get involved with cryptocurrencies, but it also helps to legitimize them in the eyes of the public. Visa. By allowing the use of a stablecoin like USD for settlements on its payment network, Visa is taking advantage of the speed and efficiency that cryptocurrencies can provide. This could potentially make international payments faster and more cost-effective, which would be a major boon for businesses that operate across borders. JP Morgan Chase. The fact that a major bank like JP Morgan Chase has launched its own cryptocurrency is a clear sign that traditional financial institutions are taking the potential of cryptocurrencies seriously. While JPM Coin is currently only available to institutional clients, it could potentially pave the way for more widespread adoption in the future. Banco Santander. One of the major advantages of using cryptocurrencies for cross-border payments is that they can potentially reduce the time and cost involved in these transactions. By using Ripple's XRP cryptocurrency, Banco Santander is taking advantage of this technology to provide a better experience for its customers. MoneyGram. The use of cryptocurrencies like XRP for cross-border payments has the potential to disrupt the traditional financial system and make it easier and more affordable for people to move money around the world. MoneyGram's partnership with Ripple is a clear sign that major players in the industry are starting to take notice. MicroStrategy. The decision by MicroStrategy to hold a significant portion of its treasury reserves in Bitcoin is a clear sign that cryptocurrencies are being viewed as a legitimate store of value. If more businesses follow suit, it could potentially lead to a significant increase in demand for cryptocurrencies, which could in turn drive up their value. These are just a few examples of how businesses and banks are using cryptocurrencies, but the potential applications are virtually limitless. As the technology continues to evolve, we can expect to see even more innovative uses of cryptocurrencies in the years to come. A cashless society is one where the use of physical cash is replaced by digital payments. The rise of digital payments has made it easier and more convenient for people to conduct financial transactions without the need for cash. The benefits of a cashless society are numerous, including greater convenience, security, and financial inclusion for those who may have been excluded from the traditional banking system. Several countries have made significant progress towards becoming cashless. Sweden is often cited as the most cashless society in the world, with cash accounting for just 1% of the country's GDP. Many businesses in Sweden no longer accept cash, and the use of digital payments is widespread. Norway is another country that has made significant progress towards becoming cashless, with cash accounting for just 4% of transactions in the country. China is also making significant strides towards a cashless society. The widespread adoption of mobile payments in the country has made it possible for people to conduct financial transactions without the need for cash. In addition, the Chinese government has developed a digital currency called the digital yuan, which is currently being tested in several cities across the country. In the United States, digital payments have also become more common in recent years. In 2020, the use of cash fell by 30%, while the use of digital payments increased by 10%. However, the adoption of digital payments in the United States has been slower than in some other countries, with cash still accounting for a significant proportion of transactions. Despite the benefits of a cashless society, there are also concerns about the impact of this shift on privacy, security, and financial stability. As more transactions are conducted digitally, there is a risk that personal data could be compromised or that financial systems could be disrupted by cyberattacks. Additionally, some worry that a cashless society could lead to increased inequality, as those who are unable or unwilling to use digital payments may be left behind. To address these concerns, some countries are exploring the use of central bank digital currencies, CBDCs. CBDCs are digital currencies issued by central banks that are backed by a country's government. CBDCs could provide a more secure and stable form of digital currency, while also addressing some of the concerns about the impact of a cashless society on privacy and financial stability. In conclusion, the shift towards a cashless society is a trend that is likely to continue in the coming years. While the benefits of a cashless society are numerous, there are also risks and concerns that need to be addressed. As countries continue to explore the use of digital currencies and other forms of digital payments, it will be important to strike a balance between the benefits of convenience and financial inclusion and the risks of privacy and financial stability. Decentralization is a key feature of many cryptocurrencies and is often cited as a major advantage over traditional fiat currencies and even central bank digital currencies, CBDCs. Decentralization means that there is no central authority controlling the currency, but rather the transactions are validated and recorded by a network of participants or nodes. This makes it more difficult for any one entity to control or manipulate the currency. In contrast, fiat currencies are controlled by central banks and governments. These entities have the power to issue new currency, set interest rates, and implement monetary policies that can affect the value of the currency. CBDCs, while still being developed and tested, are also likely to be controlled by central banks and governments, which may raise concerns about privacy, control, and security. Decentralized cryptocurrencies, such as Bitcoin, are not controlled by any central authority. Transactions are validated and recorded by a distributed network of participants who use complex algorithms to ensure the security and integrity of the system. This makes it difficult for any one entity to manipulate the currency and also ensures that the currency is not subject to inflation caused by the creation of new units of currency. The benefits of decentralization include greater security, transparency, and control for users. Decentralized systems are less vulnerable to cyber attacks and hacking attempts as there is no central point of failure. Transactions are also recorded on a public ledger, which makes it easy for users to verify the authenticity of transactions and ensures that the system is transparent and accountable. Decentralization also means that users have greater control over their own assets. In a decentralized system, users have direct control over their wallets and the ability to transact directly with other users, without the need for intermediaries such as banks or financial institutions. This can make transactions faster, cheaper, and more secure, and can also promote greater financial inclusion, particularly for those who may not have access to traditional banking services. In contrast, CBDCs may still be subject to the same risks as fiat currencies, such as inflation and manipulation by central authorities. While CBDCs may offer some advantages over traditional fiat currencies, such as faster and cheaper transactions, they may still be subject to government and central bank control, which could raise concerns about privacy and financial freedom. In conclusion, decentralization is a key feature of many cryptocurrencies and is often cited as a major advantage over traditional fiat currencies and CBDCs. Decentralization provides greater security, transparency, and control for users, and can promote greater financial inclusion and freedom. As the use of cryptocurrencies and digital currencies continues to grow, it will be important to consider the benefits and drawbacks of centralization and decentralization in designing and implementing these systems. The future of crypto to fiat is an interesting and complex topic, as it involves not only the growth and adoption of cryptocurrencies, but also the potential impact on traditional fiat currencies and the global financial system as a whole. One potential future for cryptocurrencies is increased integration and acceptance in the mainstream financial system. As more businesses and individuals begin to accept cryptocurrencies as a form of payment, it is possible that they may become more widely adopted and integrated into the financial system. This could lead to greater price stability and increased liquidity, as well as greater use cases for cryptocurrencies beyond speculative trading and investment. However, there are also potential challenges and risks associated with increased adoption and integration of cryptocurrencies. These include regulatory challenges, security concerns, and the potential for market manipulation and fraud. Additionally, the volatility and lack of price stability in many cryptocurrencies could limit their ability to serve as a reliable store of value or medium of exchange in the long term. Another potential future for crypto to fiat is a more direct competition between cryptocurrencies and fiat currencies. As more people turn to cryptocurrencies as a store of value or medium of exchange, it is possible that traditional fiat currencies may begin to lose value or relevance. This could lead to increased volatility and instability in the global financial system and may require significant changes in monetary policy and regulation to address. Ultimately, the future of crypto to fiat will depend on a range of factors, including adoption rates, technological advancements, regulatory frameworks, and market trends. While there are many potential challenges and risks associated with cryptocurrencies, they also offer many potential benefits and advantages over traditional fiat currencies. As the world continues to evolve and change, it will be interesting to see how cryptocurrencies and fiat currencies continue to interact and shape the global financial landscape. In conclusion, the rise of cryptocurrencies has brought with it a host of advantages over traditional fiat currencies, such as greater transparency, security, and financial freedom for users. Decentralization is a key feature that sets cryptocurrencies apart from both fiat currencies and CBDCs and provides a level of control and security for users that was previously unavailable. As the world moves towards a cashless society, it will be interesting to see how cryptocurrencies and digital currencies continue to evolve and whether they will become more widely adopted. Thank you for watching Juice Crypto Talks. We hope you found this discussion on the benefits of cryptocurrencies and decentralization informative and engaging. If you enjoyed this video, please be sure to like and subscribe to our channel for more insights and discussions on the exciting world of cryptocurrencies.